This presentation is for educational purposes only. Investing in equities involves risks. Estimates are based on January 2026 data. Consult a licensed financial advisor before decisions. Quantum tech investments require understanding legacy mathematical security. Nearly all digital interactions, from bank transfers to WhatsApp, rely on public key cryptography like RSA and ECC. These rely on prime factorization, easy to multiply large primes, but impossible for supercomputers to reverse. Cracking a 2048-bit RSA key takes classical computers millions of years and has provided security against hacking for over 40 years. Quantum computers use quantum mechanics. Qubits exist in superposition as both 0 and 1. Shor's algorithm lets quantum computers factor primes instantly, breaking the million-year lock in seconds. Harvest now, decrypt later means adversaries steal data now for future decryption. With these risks, financial hubs like Singapore and Hong Kong demand urgent quantum safe upgrades. Singapore's National Quantum Safe Network is now live. Hong Kong bridges China's quantum backbone to global markets with chip-based networks. Recent breakthroughs in chip-based quantum networks, PolyU, have made widespread deployment cheap and fast. As an investor, how do you invest in Asia's quantum game? Consider these 5 quantum play stocks. Number 1. OCBC Bank in Singapore. OCBC is the early adopter of quantum secured network. They are the first to recognize that a bank's most valuable asset isn't money, it's trust. They are the first Asian bank to integrate Singtel's quantum safe network for their internal data. Current share price as at January 20th is SGD 20.31, while its fair price is SGD 28.28. Number 2 is China Telecom. They have turned a threat into a product by selling quantum-safe SIM cards to millions of high-security users. Current share price as at January 20th, 2026 is 5 Hong Kong dollars and 19 cents, while its fair value is 6 Hong Kong dollars and 40 cents. The high-yield leader, 5.8%, benefits from state-mandated security upgrades. Number 3. Singtel is building the pipes. As the operator of Singapore's national quantum safe network, they charge other companies for the privilege of a secure connection. Current share price is SGD 4.46 with a fair value of SGD 5.10. It is an infrastructure play with strong asset recycling potential. Number 4. Baidu in Hong Kong is now a Tier 1 AI and quantum firm. Its Kunlunxin chip unit filed for HK IPO in January 2026. Kunlunxin valued at $16 billion to $23 billion. Baidu's 59% stake about $13 billion. Expects $1.1 billion in 2026, 40% from external clients. Baidu merges Quantum with ErnieBot LLMs. M100/M300 chips in 2026/2027 for quantum classical hybrids. Baidu's Liangxi platform offers quantum as a service via smartphone app, like AWS for Asia. Analysts from JP Morgan and Benchmark have raised price targets to $188 to $215 USD, 145 to 166 Hong Kong dollars, based on a sum of the parts (SOTP) valuation. Last, ST Engineering in Singapore becomes post-quantum cryptography powerhouse by 2026. In 2025, ST launched Quantizant PQ's readiness platform to scan and upgrade legacy infrastructure. ST partners on Singapore's quantum-safe roadmap for finance and government, generating recurring revenue. Quantum-safe encryptors are hardened devices supporting PQC and future QKD. While software is vulnerable, hardware is hardened. ST Engineering's quantum-safe encryptors are physical devices that sit at the edge of a network. These boxes are agile. They support both current PQC, math-based, and future QKD, quantum key distribution, which uses light particles. In Q4 2025, ST has 32.6 billion SGD in its order book, with defense and public security representing 45% of its revenue. ST targets 13.6% net profit CAGR till 2029, with digital business growing over 1.3 billion Singapore dollars by 2030. This represents a doubling of their 2024 digital revenue. significantly de-risking the company from its historical dependence on aircraft maintenance. How do we invest in this quantum play? Assuming we have $10,000 to invest, we will invest this through the lens of modern portfolio theory. Our goal is to maximize the Sharpe ratio, a measure of how much excess return you receive for the extra volatility you endure. We allocate your $10,000 based on a barbell strategy. 80% is placed in low volatility value stocks that provide good dividends, while 20% is placed in high beta growth stocks to capture the quantum technology surge. As value stocks, we will invest 35% to OCBC, China Telecom 25%, and Singtel 20% as defensive core. For growth, we put 10% each in Baidu and ST Engineering. Dividend yields provide safety net even in sideways markets. Based on this portfolio, we estimate the Sharpe ratio to be between 1.15 to 1.3. A high Sharpe ratio above 1 means the return to risk is positive with dividend yield of approximate 5%, protecting your investment from inflation and market fluctuation. Thank you for watching. Don't forget to subscribe to this channel and like this video.